Hi everyone, welcome to our Monday weekly forecast with Vantage, where we talk about the key fundamental news events that will take place this week, and also a quick recap of what happened last week as well. As we know, we had big inflation data coming in from the US, which drove a lot of the moves, and also we'll also look at some of the setups that we can expect for this week. So just before we get started, let's just make sure everything is running smoothly. So we are streaming directly into the Vantage app as well. And also we'll be on Zoom. So please send in your questions via the app on Vantage as well as through the Zoom chat. So let's just wait a couple of minutes before we get going and just make sure everything is running all smoothly and you guys can hear me loud and clear as well. It's okay, we've got the Zoom chat as well. Okay, so I've just typed that, making sure that's running fine. And through the app as well. Let's just check the app, Vantage app. Okay, so all looking good everywhere. All right. The chats are up and running. Right, everything's streaming well. Okay, so I think we are ready to start. Okay, right. So, okay, just a quick disclaimer before we get the show going. So all information, opinions expressed in this presentation and in the slides are purely for educational and informational purposes only. Please, they do not constitute any investment advice or financial advice. So please do your own due diligence before putting on any trades. All right. Okay. So here's the agenda for today. We'll be looking at a quick recap of what happened last week. So we'll be looking at US inflation data, CPI and PPI. We'll also quickly look at retail sales data that was released on Friday, together with bank earnings. We had three big banks reporting, and then we'll quickly look at, the effects that this results had on the dollar index as well as gold, and then we'll look at the key events to watch out for this week. Okay. Okay, so we'll start off with US inflation. Okay, so this is a chart that we brought up last week as well. So basically, this chart is showing us this annualized change in CPI, which is shown in the blue line, and the ISM prices index. Okay, so this is the average price between the manufacturing sector and services sector. Right, so the ISM prices average is shown, illustrated in the red line, and what we discussed last week was, we said that the ISM prices tend to lead overall CPI inflation figures, which is clearly seen here when prices index moved up way before CPI, and then it peaked and started turning down before headline CPI did. So because ISM prices are always released prior to CPI inflation data, so in the last reading for March, it actually dropped lower, which strongly suggested that CPI should follow suit, and which it did. Right, so CPI, headline CPI, has been falling in tandem with ISM prices leading the way. Right, okay. So here we have the CPI data for the month of March. So the dark red line is the headline CPI, all items, followed by the slightly lighter color in red, which is core CPI. So as you can see, headline CPI has been falling pretty significantly, while core CPI, although it has peaked, it has now started to slow down. So this might be a little bit of concern because this might make the Fed think twice about pausing their hiking cycle. If we see both of these indicators heading lower together, that would be a very encouraging sign for for investors, and it means that the Fed or the Federal Reserve has a strongly managed to tame inflation, and that means they can be less hawkish moving forward, right? Okay, so what is the core CPI primarily made up of? It consists of the shelter index, which is your rents and home prices and services. So as you can see, these two components have yet to peak and head lower, unlike headline CPI and core CPI. So once these two components start to peak and drop lower, I think we can safely say that inflation has been tamed quite confidently, and we can expect the Fed to be very to actually to pause and hold rates steady. So that would mean if they keep rates steady, that's likely that we would see bond yields start to fall again further, and we could also see the dollar index start to fall again. So that is why these two components are key to watch. Okay, so next is PPI, which is Producer Price Index. So basically, this is tracking wholesale inflation, which is what the industries are, the wholesalers will be, which affects wholesalers. So as you can see, for both headline PPI and the core, both have been trending lower and have been trending lower sharply. So this is a very encouraging on the wholesale side of inflation. Okay, next is US retail sales. Okay, maybe while because we had the inflation data on Tuesday and Wednesday, so let's just quickly see how that had an effect on DXY, right? Okay, so let's just quickly look at the charts. Okay. All right. Okay, so what we have here. Okay, now we are looking at the chart of the DXY, which is the dollar index. Okay, so this is the daily chart. Okay, so as you can see, on the days from 11th of April all the way till 13th of April, during this period was when US inflation data was released. So we had CPI first, released on the 12th, followed by PPI on the 13th. So as you can see, softer inflation data means that the Fed doesn't need to be as hawkish as they need to be, as in the past, and thus the dollar index sells off and also bond yields fall as well. So in this scenario where we understand that inflation at the consumer level and at the wholesale level is falling, this means that we can expect the dollar index to fall quite significantly. And also, thus, if the dollar index is falling, it means all the other major currency pairs against it should be rising strongly, right? So this is what we saw on, okay, let's just zoom in. Let me zoom in a bit here. Yeah, okay. So as you can see, from the 11th of April to 13, we had the big moves down in DXY, right? The dollar index. So similarly, if you were to look at the euro and the pound, so let's look at euro first. So if dollar index is falling based on softer inflation data, then naturally we would expect the euro to rise strongly. Okay, so just give me a second while the page loads. Okay, seems a bit slow today. Hang on. Yeah, okay. So as you can see here, this is the daily chart for Euro USD. So similarly, as you can see, yep, from 11th April all the way to 13th April, we had a big move in Euro USD as inflation, softer inflation data drove the dollar index down, right? And if you were to look at the pound cable, we will see a similar price action as well. Okay, so now let's just go back to our slides. Okay. Okay, so we are back on our slides. Okay, this can... Right, okay. Okay, there's a question coming in here. Okay, is the dollar going to drop further? Okay, right. Okay, we'll quickly get to that as well. Right. Okay, it's a very good question here, and it's definitely because it's important one because ultimately the direction of the dollar will drive the moves for all the other currency pairs and for gold as well. So let's just quickly cover retail sales and bank earnings first before we answer this question. All right. Yeah, guys, feel free to please engage through the app or through the Zoom chat as well. Anytime you need to stop me to clarify anything that we've discussed, or would you like to have a relook at some of the charts or data that we've seen, please feel free to do so. Yeah. Yeah, just stop me at any time and I'll be happy to answer your questions. Okay, so let's now just quickly take a look at retail sales and bank earnings. So this data was released on Friday, 14th of April, right? The last trading day of the week. So retail sales were announced at about 8:30 p.m. UTC +8, and bank earnings were slightly before that. Okay, so what we see here now, this chart is showing us the retail sales data. So as you can see, after a strong month of sales in January, retail sales have actually tapered off and dropped in February and March as well, with March being quite a significant, having a significant drop, falling almost 1% at the headline level. Right? Okay, so you would think that with weaker retail sales, it means okay, so let's just start again. So weaker retail sales means consumers are spending less. So if consumers are spending less, they're buying, naturally they're buying less stuff. So demand is pulling off. So if demand is pulling off, we can expect prices to fall as demand comes off. So this would naturally you would think that this would be positive for this would be positive news like what we had for with the CPI data, right? So if consumer spending is slowing down, prices of goods and services should follow suit. So that means the Fed does not need to be hawkish, right? They don't need to continue raising rates. But however, the markets actually reacted very differently to this piece of data. So this retail sales data was announced at 8:30 p.m. UTC +8. And actually, in fact, the dollar index reversed pretty strongly and went higher, right? I think some of the reason, or well, not some part of the reason could be attributed to the fact that the core retail sales, which excludes gasoline and automobiles, didn't drop as much as the other components. So because of that, I think markets have taken that consumer spending is still relatively strong, and also because of another reason is the banking sector, right? After we had the financial crisis with Silicon Valley Bank and First Signature Bank in early March, we thought there was going to be a big banking crisis that will eventually spill over to the rest of the economy. But things have been resolved pretty smoothly, and JP Morgan, Citigroup, and Wells Fargo all reported good earnings and revenue on Friday, right? So usually the banks will always announce their earnings pre-market. So this would be anytime between 7 p.m. and 8 p.m. UTC +8. So well before retail sales data was released, and also well before the equities markets open. So as you can see, we won't dive into the details, but basically EPS is earnings per share. So it's the profitability of the companies of the bank. So EPS and revenue for each of these banks beat their estimates, right? So we had very strong results with regards to EPS and revenue, despite all the banking issues that we experienced in early March. And not only were the results very good. Okay, so these were results for the first quarter of 2023. So not only were the results for this quarter very good, all three banks have actually issued forward guidance or positive forward guidance. So what this means is that they're expecting revenue to grow in the second quarter, and they're also expecting earnings per share to grow again. So if that is the case, that means the banking sector is robust, is strong, and the economy overall is doing well as well. So this would mean to the Fed that I can still continue to raise interest rates. So Chairman Jerome Powell will look at data such as this and retail sales and inflation among other stuff, and look at the overall picture. And if he still feels that the US economy and banking sector is able to handle another interest rate hike, they probably will. But this is all reflected in the retail sales and banking earnings so far. So I think this week moving forward, more banks will be releasing their data. And I think we should expect to see an overall healthy earnings season coming from the big banks. Okay, so now that we've covered last week's inflation data, retail sales, and a quick look at banking earnings, we'll look in more detail at how the DXY has traded during this period. Okay, so now we shall go back to our charts. Right, okay, so let's just go back to DXY, the dollar index. Okay, so just apologies for the slow transition in charts today. I'm not sure what's up with TradingView, but okay, anyway, it's going to switch pretty soon. Okay, we'll be looking at the daily chart for the dollar index. So we'll see the downward pressure in this instrument as CPI came in softer at the consumer level and the wholesale level, right, which is shown here, 12th and 13th of April. And on 14th April, when US retail sales were released together with the banking results, we saw an abrupt reversal in the dollar index. We also saw reversals in the price of gold, and naturally we would see the reversals in all the major currency pairs that trade versus the US dollar. Right? So these pieces of data is actually important to track and understand the results, because it will help you to determine which way to trade. Right? Okay, so softer inflation data for CPI and PPI would mean that yes, the dollar will continue to weaken, and I should be looking to short the dollar or continuing to add positions in my short trades. Okay, but however, not only did the dollar index reverse on Friday due to the retail sales and it could also be a combination of profit taking, right? Basically, if you look at the daily chart, the first support we have here at 100.82 is also a pretty significant level, because in early Feb, price hit this level and quickly bounced when we saw the dollar index rise pretty strongly as and reversing most of the moves, right? Okay, so this could also be a case of profit taking, right? As big institutions and other players have been shorting the dollar aggressively, they have to take, the only way you can realize profits if you close out your short positions, right? And in order to close out your short positions, you're actually buying back your positions. So so the only way to capitalize on your short trade is to buy back the position. So as the short traders close out their trades by buying the index, it actually drives prices higher. And then after that, probably very likely shorts came back online again here, driving the price lower. So now 100.82 is probably a key support level to watch in the near term, right? Because not only has it bounced off this level, not once, but twice, but also we've seen the change in expectations by markets as well. So markets are probably taking the view that the retail sales data plus bank data, and so there's one more additional piece of information that came out on Friday as well at about 10 p.m. UTC plus 8. This was a survey by the University of Michigan, and they were looking at consumer inflation's expectations. So this data actually came in higher than expected, right? The forecast for this data was 3.5% for inflation expectations, but the data came in higher at 4.6%. So you have three pieces of data: retail sales, bank earnings, plus consumer inflation expectations by the University of Michigan. These three pieces of data have actually overwritten the softer CPI and PPI data, which came out earlier last week. So we can see that not only in terms of technical price action, but combined with the fundamental data, you can see that clearly price has bounced off 100.82, and we've started this, and the dollar index has started in the green as well. Okay, so this is why we have seen this abrupt reversal in the dollar index. Okay, so this is pretty important because this probably sets up the moves for this week. Okay, oops, hang on, what happened? Okay, so I think at least in the first half of the week, I think we can expect dollar index to continue rising, right? Continue rising, and we can see the first resistance coming in at about 101 point. Okay, so but let's just say 102. Okay, I think the first resistance, immediate resistance coming up would be at about 102, which is also in line with the 23.6% Fibonacci retracement. So this is one key level that we need to look out for. So if price consolidates around this level and starts moving down again, then probably we can this come to the conclusion that the dollar index is going to continue to weaken, right? So probably all the profit taking has all the profit taking trade action has ended, and then probably new shorts would probably come back online. And we can also see this descending red dotted resistance line as well. Okay, so I think for the dollar index, it's very likely that at least for the first half of the week, it could continue to move higher, and we should watch look out for 102 as the first level of resistance. Okay, and so similarly, if you were to look at the euro, sorry, just give me a sec while the page transitions. Okay. So similarly, okay, so this is a daily chart for the euro. So as you can see, the last two trading days, the euro has been falling naturally as the dollar index rises. Okay, so let's just quickly check out some levels here. Okay. That seems a bit slow today. Let me just okay, sorry. Okay, so as you can see, the first immediate resistance for the euro would be at 110.75. So like this is the immediate recent swing high that I have here. You can also probably see, okay. Okay, you can probably see, oops, what is this? Yes. I want to Fibonacci summary on the horizontal. This is my support. I can get this to. Okay, sorry. Okay, so sorry. The line I tried to change the support to green. It's not changing. Okay, but basically, I think the immediate levels to look out for the euro would be 110.75, 110.80, close to 110.80 as the immediate resistance. And the first support would be at 1.0806. Okay, so these are the support and resistance levels for the euro. So if we see the dollar index rising, and we should expect this pair to drive lower. So I think the first at least 1 or 2 days of the trading week, the dollar should continue to strengthen, and we may see this drive the euro lower as well. Okay, so let me just go back to Forex. Okay, let me just show you guys Forex Factory. Right. Okay, what I was talking about, the University of Michigan inflation expectations. So this is the data that was released last Friday. So we had core retail sales, and then the overall consumer sentiment index plus the inflation expectations from UOM. So as you can see, inflation expectations by the consumer was dropping pretty steadily for most of last year. But surprisingly, we've had a big jump in expectations this time round for this data, right? So it's quite a big jump from 3.6 to 4.6%. So this is also one of the factors that has contributed to the reversal in the price of the dollar. Okay, right. So now, okay, so back to the slide. So we've covered DXY. We've seen what are the levels to look out for the daily chart, and also quite likely we should see the move in dollar continue higher, at least for the next 1 or 2 days. Okay, so gold. So let's look at, oh, sorry. Okay, so yeah, okay, gold. Same thing, we'll go back to our charts. Okay. Bear with me as the page loads. Okay, so once again, we're going to look at the daily chart. Okay, so one of the reasons for looking at the daily chart at the start of the week is good that it gives us the bigger picture of what is happening in that particular instrument with regards to price action, with regards to technical analysis, and also with regards to fundamental data or key fundamental data that was released last week and this week as well. Okay, so this is, yeah, okay. So we have gold here. Okay, so let me just quickly draw some resistance and support levels. So we like to look for overlapping resistance and support levels. So okay, let's get the first one. Okay, horizontal way. Okay, now why is this giving me? Okay, fine. Oh, okay, this is giving me in green. Let me see if I can move this. Sorry, apologies. Trading view for whatever reason is pretty slow today. We see, okay. So let's just look. Okay, so we like to see overlapping levels of support and resistance. Okay, so you can see this looks like a pretty decent support level where price has been rejected here, and has found general support around this level here as well. Okay, and let's just look and get the immediate resistance. So we have the immediate resistance here. Okay, so finally my templates are up. Okay, so actually this would this would be the first resistance levels here for gold, which is about 2070, right? This would be the first resistance level or major resistance level. You could also see that 2050 as an intermediate resistance level, right, in the near term. And also in the something closer to current price, you could probably see that yes, 1990 is also probably like an intermediate support level as well. So as softer inflation data came in last week, the price of gold moved higher, right? Okay, so because as inflation data cools, or as inflation cools, bond yields will fall, dollar index will fall. This creates a tailwind. This creates a tailwind for gold. What's going on here? There's a lot of things going on with. Okay. Sorry, apologies. Trading view, at least for me, is acting a little bit strange today. Okay, but okay, so all right, okay. Okay, so as you can see, we also have done the Fibonacci retracement here as well. So as you can see, the first support. Yeah, okay, let's not call it intermediate support. Let's just call this a first support here, which aligns closely to the 23.6% Fibonacci. And also we have the second support, which is close, to the 38.2% Fibonacci. So these are the, I would say, immediate support levels to look at for the price of gold. Okay, so we have first support at 1988, second support at 1955. We have the first major resistance at 2070, and we probably have some intermediate resistance at 2045. Okay, so as seen earlier in the week or last week, softer inflation data drove the price of gold up, but as soon as the data for retail sales, bank earnings, and consumer inflation expectations arrive, it changed the fundamental view, and bond yields started to fall, dollar index started to fall. So bond yields started to rise, dollar index started to rise. Apologies. So in this environment, this creates a major tailwind for gold, and prices started to pull back. And prices came back close to the first support each time on last week Friday and today as well. So far we've seen gold bounce up this week. So you have it is likely, since it has I would say bounced off this level, I think we can probably see gold continuing to edge higher. But again, the price in gold will be primarily driven by the dollar index and bond yields. So by keeping an eye on dollar index and bond yields will give us good direction of where gold could possibly hit. Right. Okay. Right. Next, we shall look at what's coming up this week. Okay. So this week on the calendar. Okay. So we'll be using Forex Factory to view what are the key data that's coming up this week. Okay, so today, with regards to US, okay, we have Empire State Manufacturing Index. Okay, so this generally, this is an important piece of data for the state of New York, but it might not have a very big impact on currency pairs. but it's still something to take note of at 8:30 p.m. UTC plus 8. And then we have ECB President Christine Lagarde speaking at 11 p.m. UTC plus 8. Now, given the strength of the dollar and the weakness in the euro, if she appears hawkish during this speech of hers, it could very well help to prop up the euro and stabilize its downward trend. So just take note of the ECB key events tonight. So I think this will probably have a larger impact on markets rather than the Empire State Manufacturing Index. Okay, so tomorrow at 9:30 a.m. UTC plus 8, the Reserve Bank of Australia will be releasing its minutes of the last policy meeting that it had. So 2 weeks ago, the RBA paused and did not raise interest rates. And if the minutes are construed to be dovish by markets, it is very likely the Aussie US dollar pair would continue to sell off if the dollar still remains strong, and also if this policy meeting minutes turn out to be very dovish. So this is also something to watch out for the Aussie pair, right? So basically for this, if dollar continues to remain strong and the policy meeting minutes turn out to be dovish, then it's very likely we can see this pair slide further. Okay, then we also have for the pound GBP for the UK will be releasing data on savings count change and average earnings index. Okay, so average earnings, if the earnings index increases, it means that the spending power of the UK consumer is still relatively strong, and that will put further pressure on the Bank of England to continue raising rates. Okay, so this is also something to watch out for tomorrow at 2 p.m. UTC plus 8. Okay. Right, okay. Then, okay, we also have German CU economic sentiment. Okay, this is only for Germany. Might not have overly big impact on the euro, but I think what's coming up after that for the Canadian dollar is pretty important. So we have CPI data or inflation data for Canada being released tomorrow, 8:30 p.m. UTC plus 8, followed by the governor's speech at 11 p.m. UTC plus 8. So given that the Bank of Canada paused at its last policy meeting, but it continued with quantitative tightening. So although they did not raise interest rates, they still are continuing on with quantitative tightening, which means they're pulling liquidity from the market. So as they do that, the Canadian dollar should continue to strengthen. So CPI data will be important because if CPI data comes in hotter than expected, then it's very likely the Bank of Canada may resume its hiking cycle. So if that were to happen, the dollar CAD should continue to fall, right? So dollar CAD has been falling for the last. Okay, let's see if we can bring up the chart here quickly. Yeah, it's always easier to see. Right. Okay. Okay. So now let's move back to the daily chart. For the dollar CAD. Okay, just give me a second as the page loads. Okay. Okay. While waiting, does anyone have any other questions? Right? Or would like to review anything while the page is loading? While we wait for the page to load. And just a couple of questions on dollar. It's going to drop. We've answered that. All right. Sorry, apologies for this again. So not sure why my trading view. Okay, here we go. Took a while, but we finally got to it. So okay, yeah. So as you can see, dollar CAD has been falling since middle of March as the dollar weakened. And we see the recent bounce here as dollar strengthened again. So now if CPI for Canada comes in hotter than expected, which would mean that the Bank of Canada would need to start raising interest rates again, we could see a potential reversal in the strength of dollar CAD, and we can potentially see it reverse and come back down towards 133.20 again. Right, so this Canada's inflation data is something to be, it will be a key event for this pair, followed by the governor's speech as well. So this is something that you should guys, if you guys are trading the dollar CAD, these are the two key events to watch out for tomorrow. So once again, this will be tomorrow, 18th of April, 8:30 p.m. UTC plus 8 for CPI data, followed by the speech, 11 p.m. UTC plus 8. Similarly, we have inflation data coming out of the UK as well. This will be on 19th of April, 2 p.m. UTC plus 8. And just quickly looking at CPI here. So we're looking at UK CPI. Yes, okay. So if you look at this chart here, after trending lower for about 4 months since November, inflation data for the last month or the previous month actually ticked up higher. Now, this means that inflation is creeping back into the UK, and thus the Bank of England will need to be more hawkish and start raising rates again. So this could be a potentially tailwind for the cable. So if inflation comes in hotter than or higher than forecast and higher than the previous month's reading, I think we can see a big demand in the pound. Now, this is another key event to look out for. And okay, similarly, we also have data coming, inflation data coming from New Zealand on Thursday, 20th of April, 6:45 a.m. UTC plus 8. So similarly, any higher data, if inflation is hot, you can expect New Zealand dollar to gain against the US dollar. And also it is important to note that at its last policy meeting, the Reserve Bank of New Zealand actually surprised markets and raised interest rates by 50 basis points instead of 25. So they still remain very hawkish. And should CPI data continue to print to the upside, I think we can see the New Zealand dollar, the Kiwi, gain against the US dollar. Okay, next. Okay. On Thursday, 20th April, 11:30 p.m. UTC plus 8, there's another key event for the Canadian dollar. We have the Bank of Canada Governor Tiff Macklem speaking again. Let's see what is he talking about this time here. Okay, so it's a testimony along with other senior deputy governors. Okay, so we're not sure what are the exact details of the agenda, but yeah, this would be something to pay attention as well. Okay, then we have a lot of flash manufacturing PMI data and services PMI data for the Eurozone coming up. Okay, and then we have retail sales as well for Canada, and also we have flash manufacturing PMI for America. Okay, so I think with regards to the flash manufacturing and services PMI data, they shouldn't have an overly major impact on currency markets. So just to conclude today's session, right? So what to watch out for this week would be the main CPI data that comes out from Canada, from the UK and New Zealand, because this would drive the moves of this of the respective currencies. And also it's important to note that to keep an eye on the dollar index and bond yields to see whether the strength of the or this renewed strength in the US dollar will continue as the week continues. Okay, so I've come close to the end of my presentation for today, or for today's webinar, sorry. So are there any other questions that you guys have? And would you like me to revisit anything, or would you like me to look at any particular currency pair or commodity while we're here? Right. Okay, guys, remember we are on Vantage app and also on the Zoom app as well. All right, so feel free to drop in your messages or questions. And otherwise, if there's nothing else, then yeah, then then we'll just end the session today. So just remember, we have key inflation data coming in from Canada, UK, and New Zealand, and keep an eye on the dollar index, right? But especially after last week's reversal, it is quite likely that the dollar may continue to gain strength against its currency pairs. That would impact the price of gold and also naturally would impact all the other majors. Okay, so right, okay. Yep, I'm just going to confirm. Okay, there's no further questions. Then maybe okay. Okay, so right, let's just end with the dollar index again, right? Just to recap the key levels. Okay, so okay, maybe let's just zoom in on the hourly chart. Hopefully this loads quickly. Right, let's just see what's now that we've seen what is the overall or the longer term trend of the dollar index. Let's zoom in a bit onto the 1 hour chart and see how the pair has been trading today. Or not the pair, but how the index has been moving today. So as we mentioned earlier, 182 was a key support level, and it reversed together based on fundamental data coming in from the US, which was retail sales, bank earnings, and University of Michigan's consumer inflation expectations that drove the price of DXY higher. And so far today as well, the dollar has remained elevated, and it looks to be ranging between about 101.80 and about 101.650. Yeah. Okay, so we had a big move, or relatively big move in the dollar index in the past hour, but now it's pulling back slightly. So as you can see, it remains relatively elevated, and it is quite likely that the dollar index could make a push for the first resistance. And if price does get exhausted here at this level and starts pulling back, then we can probably say that this strength in dollar has started to weaken, and this could be a potential entry for a short trade, right? So once again, please do all your due diligence beforehand and take note of the fundamental data, take note of your technical analysis before putting on any trades. Okay, so we can see dollar index consolidating roughly now. Let's see what happens when the US markets open, whether we see the dollar index making a push for the first resistance. Okay, and then let's just quickly look at gold on the hourly chart. Yes, okay, sorry guys. Apologies again for the delay in switching of the charts for TradingView. We'll get this sorted for next week's webinar for sure. Not too sure whether it's an issue in my browser or an issue in the computer, but yeah, we'll definitely have this resolved for next week's webinar so that we can have a much more seamless experience. Okay, so this is gold. So yep, as you can see, gold started selling off pretty early last Friday, even before retail sales, and then it bounced about 1995 level, has moved slightly higher, and now it's trading around 2011. So I think most likely if dollar index continues to rise based on the change in data, change in market expectations regarding the key fundamental data that came out, we could see gold probably drop lower, at least today and tomorrow, if the dollar index continues to rise. Right. Okay, so yeah, I think I've pretty much covered everything for today. Right. Okay, so we did a quick recap of last week's key fundamental data and what to watch, and also what and how it impacted the dollar index, how it impacted the major currency pairs, as well as gold. And we've also looked at the abrupt reversal that was caused by a change in market expectations regarding the retail sales data that was released on Friday. And let's see whether this reversal continues as the US session kicks off. All right, okay. Okay, so once again, thank you everyone for tuning in, and I hope this has been a great session for you guys. So till the next one, till next week, we'll meet again, and yeah, for sure, definitely we'll resolve the delays that we saw today with regards to TradingView. All right, no worries. Okay, okay, take care, guys. Have a good week, and yeah, just watch out for the key events that coming out this week, especially with regards to the inflation data for Canada, the UK, and New Zealand. All right, take care, guys. Thank you.